Welcome back. We are decoding the potential impact of the exit poll verdict, which is out there. Most of those polls talking about a clear win for the NDA. A. Balasubramanian, MD and CEO of Aditya Birla Sun Life AMC, is with us now with his take on this. Bala, great to have you join us on this Sunday morning. Really appreciate it. Now, as I was saying in the lead up, that you represent the massive change that this market has gone through, right? The power of retail money, retail at the forefront. And right in the lead up, right up to this 23,000 mark, it's actually retail which has been constantly buying, and FPIs have pretty much missed the bus throughout. Now, let's get your take on the exit results, the exit poll results, and what do you think we are in for over the next 2 days?
I think it's good news to have that exit poll, given the fact that before the last 2 weeks, the market was divided. The openings were coming more in favor of NDAs getting less number of seats, and therefore it could probably give a negative surprise to the market players. So first time ever I have seen in the last 5 years, maybe some kind of short position would have also got built in the market. So often I was saying last 2 weeks, I was saying that the bears are also back. And that's why I was reading the market in terms of the expectation versus the outcome, exit poll outcome that is coming in. So definitely the exit poll outcome is actually nothing but endorsement of the government work in terms of lifting the whole economy and benefiting a large pool of people, as well as they're showing a real result in terms of the economic growth. Now is running in the range of about 8%. Even last week, there was good news about the GDP crossing almost about 7.8%. So it's actually nothing but endorsement of that. It's being reflected on the exit poll. From a mutual fund point of view, as you would have seen the last few years, the mutual fund have been the largest buyer in the market when FIs were the largest sellers. There are almost about $20 billion outflow that has happened from FIs. The entire thing has been absorbed by domestic investors. And my own belief is Indian mutual fund industry have not only done a great job in actually making ensure that Indian investors do participate in the growth story of India through the mutual fund in various forms, including SIPs. And in fact, today, for a change, the equity assets is much higher than the fixed income assets, which used to be the case, which where the fixed income used to be the largest component and equities were less. And today, almost about 50-60% of the Indian mutual fund industry is come to equity assets and management, which essentially goes to say that Indian retail investors have been the large beneficiary of the run that we have seen. And probably I would assume even going forward, that I think the significant endorsement that government is getting it,
right,
public at large, through the voting process, which essentially means that the next 5 years also we'll see the Indian mutual fund industry continue to be the large player in the economy.
Bala, hi, good morning. Good to see you. Prashant here. Thanks for joining us Sunday morning. So you're breaking your routine for us, but I think it's worth it, right? I mean, it's a big day.
Yeah, it's worth it, of course.
And Bala, two things, right? One, we got this S&P outlook business, the upping that we saw. An actual rating upgrade, do you think, this kind of verdict at least quickens that process because of the stability, continuity, etc.? That is one. And, I mean, are you guys thinking about who's going to be sort of in charge at the finance ministry? I mean, those kind of things, or is it still, far out? Or those kind of, just your thoughts, Bala.
Yeah. I think clearly the way I see Prashant is, one, of course, the last week bonanza that came from Reserve Bank of India, about 2,10,000 crores giving out as a special dividend, itself actually is the showcase the commitment of both the government and the regulators to ensure the Indian fiscal number improves. So you'll see a significant improvement in terms of fiscal numbers as we move forward. And this has come on the back of one, what has come as a one-time dividend payout. Second, most of the public sector companies who have been doing exceedingly well, even that dividend payout ratio also will increase actually as you move forward, as against the earlier accounting principles of making inflows with the divestment proceeds that used to actually bridge the fiscal gap. Probably the next 5 years, you will not probably see that happening. You'll probably see more and more profit coming to public sector companies, leading to a higher dividend payout also will come. And third, which I see actually is the momentum that I've seen in building up in terms of GST collection. Now it's coming close to about 2 lakh crore size. My own estimate in the next 2 years, you'll probably see 2,00,000 crores coming from GST collection itself, given the fact that huge compliance and the push that government is giving in terms of greater adherence to the compliance. So all this thing will lead to a significant improvement on the fiscal numbers, tax collection, fiscal number improvement will happen. So there is a high probability you will see the rating upgrade for India coming inside. Of course, I did had the predictions post the RBI announcement that probably the rating agency has to look at two-notch upgrade for India, given the fact India is the only country in the world focusing on fiscal consolidation on one side, on the other side focusing on growth, taking GDP higher number. And this government mandate that is coming in at this point of time in terms of re-election, definitely I think gives the more power for fast track most of the reforms that they have been carrying out the last few years. As far as the position of finance minister concerned, my own belief is that I think some of these ministries in the last few years have done such a great job. I think government probably would look at more of a continuity as one of the more of the theme, especially in the key positions, given the fact they have done a deep impact. Rather, they have created a deep impact in terms of having right sentiment, right processes, and right efficiency, and all parameters look at it. Some of the ministries have done a great job. Therefore, I would assume even I'm taking the bet of even this FM version which is talked about. Probably the continuity factor will play a larger role. As also seen, probably the Madam Nirmala Sitharaman will be the longest serving finance minister in the country. That also, I think, it will add to the pride, both for the country as well as for the overall political environment.
Absolutely. Well, we'll have to just wait by for some of those answers to emerge over the next couple of days. But Bala, let's talk about your industry itself. Now, what's happened is that we can't wish away the fact that the kind of inflows that equity funds get, that number has been dwindling since January. From the highs of 25, 26,000, the last number was just under 19,000. While of course SIPs are still going strong, not denying that, but the actual inflows are going down. So what kind of cash levels are mutual funds sitting on? I mean, is there enough firepower to go in and buy now as this event plays out? Or will domestic funds actually be sellers and book some profits? Because you guys have been buying throughout in the last many months while FPIs have been selling. You've been absorbing that FPI selling, in fact.
In fact, Surya, I did some analysis just about a few days back. Just I was curious to know what kind of cash position would be held by the mutual fund industry. When I looked at across all schemes, the major schemes, right from large cap to the small cap schemes, the average cash levels for the whole industry I'm talking about was in the range of about 4.5 to 5%. The least was about 2%, the highest was about 8%. So that's what I saw in most of the schemes, which essentially means most of the mutual fund managers this time around did not take a bet of taking a call on the election outcome and basis which either they have created a cash or they created a short position. Therefore, the mutual fund players would be the largest beneficiary of the uptick that could be seen in the last few days, next few days, in terms of short covering, the FIs coming buying, and maybe the participations could increase quite significantly from those who have been sitting on the sideline. But mutual fund, in my view, will be the largest beneficiary. In terms of selling, I think it would all depend upon to what extent the prices get pulled up, and anything there is a merit for excessive valuations. There will be some tendency to book profit. But I think mutual fund also will start looking at beyond just 3-4 days of momentum.
Right.
And given the fact that the next 5 years, my own belief is what they have done in the last 10 years, in all probability could be carried on the next 5 years. Given the fact they've learned a lot of stuff, executions will become a little more faster. Maybe even some of the announcements they made in terms of various sectors improvement as part of the manifesto, probably will get fast tracked in the next 5 years in terms of execution. Therefore, one has to also assume we'll probably see a faster rate of growth in the country.
Okay.
But from the flows point of view, what you just mentioned about, I think it's a function of people who have been coming into the market. Some bit of profit booking even do come from the investors. But I think if you look at the net flows, whether through NFO collections or through the existing funds, we only see the net inflows coming in.
Okay. Bala, we'll leave it there. Thank you very much for joining us. Good to get that perspective from you. Enjoy the rest of your Sunday, and we'll touch base once again through the course of the week because it promises to be a big one. Thank you very much. Well, we'll take a quick commercial break here. On the other side, we'll have Prakash Devan and Deepan Mehta joining in, and we'll talk about what to do as we come back to trade tomorrow and over the next couple of days. Stay with us.